Go ahead and get started then. I want to say good afternoon. My name is Lori Drake, and I am the Community Marketing Manager here at Handle. If you don't know what Handle does, we are a software company, a premier provider of lien and notice management. We have an online payment portal, and then we have waiver compliance. This process or the software was actually made specifically for material suppliers. So if you haven't seen it yet, we would love to show you. But what a great way to start off 2024 with one of my favorite top industry veterans, Toby Brutsman. He is with Assa Abloy, been a part of the community for a long time, and he is going to talk about 5 building blocks that he thinks people should know for the new year to extend credit with confidence. Thanks for joining us today, Toby.
Thank you. I appreciate it, Laura. Thank you guys for the opportunity. Laura gave me the topic, and I thought, that's probably a really good way to start out the first of the year. We did in credit to overhaul some things, look at what's worked in the past, and try to tweak some of the things that hasn't. So hopefully today you guys can kind of get some information that's going to allow you to look at some credit items that you may have already, some credit policies or some things, languages that may be in contracts that you may want to look at and tweak, adjust or amend where you can, but we'll kind of work through some of this here and just give you a little bit of overview. Of course, there's always questions, so if you have any questions at all, please make sure to type them in the chat. Laura will keep an eye on that for me if you would, Lori, and I will kind of go through. We'll stop, have conversations where we need to. If you want to wait till the end, that's fine as well. But if we covered something that you want some more detail on or have a question about, let's go ahead and have that. I want to kind of engage an open forum and give everybody the opportunity to kind of do this as a group. This is a community for all of us to learn, and there's a tremendous amount of knowledge on this call with Lori, myself, and of course Thea, and anybody else that has had opportunities to share. Let's make sure we give those people the ability to open and have some communications. You saw the first slide there, which has the extending credit with confidence, 5 building blocks to know. Of course, as Lori mentioned, I'm with Assa Abloy, and part of our slides, make sure we always talk about safety first, safety always. No matter where you are in the company, safety is everybody's obligation. So what to know before you extend credit? I kind of refer to this as a marriage, if you will. I think credit relationships are very much like a marriage. It's a business marriage, if you will. It's best to go into all relationships with a business perspective, not to be a pessimist, but to protect yourself just in case. As we're charged with the fiduciary responsibility of the company to make sure that we do protect the company's largest asset, which is their AR. We have to be a little bit of a pessimist. If you've been in this credit industry for anything longer than a year, likely you've seen things go south. But the challenge for me is, the longer I've been in it, is to make sure that I keep that pessimism to a minimal, if I can, because I want to make sure that we're going into this with eyes wide open. I want to be able to be as non-judgmental as possible and be able to, protect the company in case things do go bad from a customer's perspective, and that we do have protections that we can reach back to. As credit professionals, we're never going to make the right call 100% of the time. Prepare for the worst. And I will tell you that if any of you are baseball fans, in baseball, you could achieve a 300 batting average, which is 30% of the time you succeed, and you'll be in the Hall of Fame. Credit, obviously, we need to be a lot better than that, but you're never going to make the right call on every credit application or every customer that comes through. Sometimes you get a little bit more conservative because you've just had a tough loss or you've had a tough couple of quarters, but you got to be responsible enough to grow the business. But again, with some of the tools we're going to talk about today, hopefully you can capture that business with an open mind, and then be able to avoid more loss than you wouldn't have by adding some language and some details. So keep that open mind, close the loopholes early in the relationship. After all, the best long-term relationships start with upfront and honest communication. And I think that goes not just with credit, but in any relationship, friendship, marriage, whatever, making sure that there's communication along the way. That communication is key to having that healthy relationship. Everyone plays nice in the beginning, so ask for anything that you can at the time of setup. And that specifically talks about credit applications, and we'll go into that in a little bit more detail, but at the forefront, when you're having those conversations about likely doing business with one another, it's the time to capture that information where everybody is like, hey, we want to buy your product, or hey, we want to be your customer. And that's great. And at that point in time, it's a good time for you to get and ask for everything: signatures, stipulations and agreements, quotes. What are you going to be able to get included that may be the key for you getting paid later on down the line? So let's start with the credit application or the contract. Put the details and language that are very key to the success of how you're going to conduct business. I strongly encourage you to, speak to an attorney about some of those. There's a lot of clauses and ifs and ands and buts and, whens and wheres. That language is critical for you to make sure that you are successful with, so it can't be defeated in a court, or at least it has some hard times and some structures built into it that are going to be hard to get around. It helps to create obligation and understanding, right? And this is where you're likely going to put your terms in there of net 30 days, or, believe it or not, I've seen contracts that say pay when paid or paid if paid. Make sure that those contracts have that language that benefit you as a company. You're not a bank, right? So you want to be able to set up the expectations as to when you should get paid, how you should be paid, who the contacts are that we need to. And I mentioned consult with an attorney to create language that will hold up to legal contesting. You never know how strong that can be until you get into a courtroom and, well, you didn't put this in the clause or you didn't put that in the clause. If you have corporate attorneys, that's great. But I encourage you to find an attorney who is specific with construction language. I think that those will help navigate, because they've seen some of those arguments and they can kind of coach you and include other language that they may have been able to get included in the past. I would create a personal guarantee language in your credit applications. Is it something that has to be done? No, but I think in the days we live in now, where there's a lot of companies being started and we don't have and the companies come through with credit requests, but they don't have a lot of history. Maybe they've been in the business for 2 or 3 years. I would require a personal guarantee to be done for the officers of the company, CEO, CFO, more than I would from a company who's been in business for 25, 30 years, just because you're not sure if they're going to make it. I forget what the average is, but it's somewhere between 70 to 80% of the companies fail within the first 2 years of business. And maybe less or more than that. But my point is, if they don't have a lot of longevity, you want to make sure that you protect yourself outside just the corporation itself and tie it back into somebody who's personal finances that you can go after. They have some skin in the game, and that's going to help you from a perspective of being able to have a little bit more secure. Require wet signatures from officers. Nowadays, we do so many things with, the web signatures and things like that. I try to be a stickler for wet signatures on those as much as we can, although it's getting, better and better and more accepted when we do the e-verification signatures. Another something else to look out for is language that should include interest and attorney fees. This is, after all, a contract, and we are doing business with one another. If we give a customer a net 30 days, and I'm not going to ask because I can't see everybody, but I know they all don't pay within 30 days, but there should be some type of penalty that your company gets for the benefit of floating them or kind of running them from a free line of credit or interest. If you have to send the account to an attorney or file a lien or a bond claim or something like that, then there's got to be some language there that should include the attorney fees. Again, these are things that are going to help you either offset loss or gain some of the money back because of the delay in payment. Gain email addresses and cell phone numbers. This is something that I have seen a lot recently, as a lot of our credit applications date back probably 10, 15 years or longer since we've been doing business for such a long time as a company. Some of our customers didn't have those cell phone numbers or the email addresses. They were using stuff via mail, and that's old school. But nowadays, it's much more of a digital environment. So obtaining those email addresses, not just one, but there's probably multiple accounts payable items, maybe portals that they're going to, because a lot of customers are going to portal businesses and portal payments. Make sure you have cell phone numbers, not just office numbers. Most people are using their cell phones now because they're not in the office that much. So gather all that information up front. It's easy to get at the beginning, right? Be clear with your credit terms. And I put net 30 there. Whatever your terms may be, net 15 or discount terms or whatever within time frame, but be very clear and specific about those. And then, of course, as I mentioned, Add the penalties. If you're not paid within that time frame, do you charge interest? How much interest do you charge? Right? There's a language in the credit applications, and I've done this a couple of times, and it's been very advantageous, and it's including the home court advantage mention. What that really specifically means is wherever your corporate headquarters are, and ours happen to be in North Carolina, right? So in our credit application, we put that any disputes, legalities, or suits will be heard in North Carolina. How is that beneficial? Well, if you do end up having to go to court with one of your customers, and God forbid that doesn't happen, but it's business, right? If you put the fact that they've agreed to hearing all of the disputes in North Carolina and they're in Texas or California, that's extra cost that they have to incur to travel to North Carolina to hear that. And that can be very beneficial for you because it may likely move quicker to a settlement or maybe put some of the heartache and things behind them if they realize they have to spend an extra cost. But those are things to kind of include at the beginning of the relationship to make sure that everybody is kind of on par with what happens. As credit, we have to have a little bit of foresight on this because we have seen front row and center that most of our customers in situations when they go bad likely will end up on the credit desk at some point. So we want to do what we can in the beginning to make sure that we're protected. I put a hint down here below, which is avoid retainage from being held from invoices if at all possible in the contractor application. I'm not sure how a lot of the contracts are set up for everybody here. It's obviously the business decision. But retainage can be very difficult and often forgotten about. And you may find, 6 months, a year, 18 months, 2 years gone by, and there's still balances outstanding. Well, they were paid, they forgot to pay you, and you maybe it was a lower balance. You didn't get a chance to call on it because you were so busy. So avoid that if at all possible, where you can. Try to get the retainage clauses excluded, but that happens at the beginning. And yes, I agree. Some companies are absolutely will not do business without it. That's fine, but it doesn't hurt to ask, right? It doesn't hurt to ask to see if you can get those removed, or hey, can you pay me in full? Sometimes just by asking, you can get those clauses cleared out. Balance the wealth of knowledge in your favor. So I don't know how many times in this industry I've been told by a salesman or somebody, oh, these guys are good as gold. They're my neighbors. They're my friend of my brother-in-law, right? And that's all hearsay, and that's wonderful. But from a credit professionals, we got to make sure that we know what's fact and what's true versus what we're being told to be true. And there's a lot of different ways that we can research that. I think everybody has looked at the reports, right, from the DNBs, NACMs, and all the other trade reports and industries that are out there. But there's this one little thing that I love to use that has a plethora of information, and it's the World Wide Web. It's likely more accurate or more timely. I don't know about accurate because you got to be careful, but you can find articles on companies from Reuters or from verifiable, noteworthy news groups. If you're dealing with an international contractor or a national contractor or a customer, to find out information that you can get from them. And maybe you're selling a company that is actually publicly traded. Well, go search that company on Yahoo Finance or to the finance site. See what you can find on their 10Q reports or on their quarterly reports that they've got out there, the things that are free to you. Take a look and search those. Are they having some trouble? Was there some news about their stocks recently? Were there some closures? I mean, right about now in 2024, we're seeing a lot of bankruptcies that are being filed, or we're hearing about a lot of those because the economy is so difficult for companies to get money. And we've seen a lot of companies, right, that have, filed bankruptcy recently. So it's always good for you to kind of verify that information. Yes, it's great that they're going to give you trade references, but I've never seen a customer give me a negative trade reference, right? They're not going to put anybody down there that doesn't give them what you want to hear. So it's our job to be that nosy 3-year-old and ask, but why? But why? But why? What do we know? What do we not know? What can we verify? What is hearsay? The discussion we're having today, right? I mean, Lori's done a beautiful job of building somewhat of a community for the building blocks here. Reach out to people in the industry. Maybe they know something that you don't know that they can help you with. And I know that Lori and I worked with each other for years. we would bounce things out. Hey, I got a credit application from this person. We'd be like, oh, well, yeah, we just cut them off. That's why they're going to you guys, right? We got to be careful with that language and discussions, but it does help you make better decisions, right? And then, of course, we pull them from the reports from the vendors that we know, right? NACM, D&B, Lien Finder, Experian, et cetera. Those are type of companies or trades that are out there, reports that are out there that we can use to our advantage to find any and all information that is available from a trade perspective. Maybe we reach out, find out that, hey, somebody in the NACM group has a, large balance that's out there for 90, 120 days. So we find out through the NACM who that vendor is. We call them. They tell us, hey, you know what? It's retainage. It's a large project. Nothing really is a concern. Hey, great, no problem. Or maybe we find out, yeah, we haven't been able to get in touch with them for 5 or 6 months. Well, now there's a concern. So we use those to our knowledge, to our advantage, to find out as much as we can and be able to be in the know. The balance for this, though, is to try to do it as quickly as we possibly can within a time frame so that we're not delaying business decisions or both because we're taking 4 or 5 days to get this information back, depending upon our workload. And yeah, I know credit always gets everything that doesn't include credit, but asks us to do everything we can. So we got to try to make these decisions as quick as possible with as much knowledge-based information that we have at our disposal. So work through them quickly, try to make those decisions. And then if we don't get a chance to find a for sure yes or no, well, then we have to build layers to manage the risk. I can't tell you how many times I've had a credit application. They're like, hey, I want $1 million. Well, who doesn't? Right? But can you actually get them qualified for the $1 million? Maybe they just opened up their business a month ago, right? And they've got $1 million order they need. I'm not so sure I'm going to be the one I want you to cut your teeth on. And I want to expose my $1 million line of credit to you because you're probably having to do all kinds of money outlaid up front for business expenses, for mobilization, or for whatever you may have going on. That's going to eat your capital, and I'm not going to be paid until your first check, which could be 90 days or 120 days down the line. If you can't approve all they're asking for, well, see if you can find ways to approve it with stipulations to help control the risk, right? And several of these I'm sure you guys have used or people have used on this, and there's probably other options, things that people have used that I don't even have listed here. So I'd love to hear some of those. But joint checks, they're better than not having. They're not great. They're not end all be all, but they are something that you can use to kind of help you manage some of the risk. Hey, I want to get paid when you get paid, so that means I contact your general contractor. We work out an agreement so that when they cut a check to you, they're cutting a check to me for the portion of material or labor that we supplied. Max credit lines, maybe you can't do the whole $1 million line, right? But maybe you can do $150,000 to $200,000. And your agreement is, hey, even when these invoices are, you hit that credit line of $200,000, even if your invoices are not due and they're not 30 days, you're going to have to make a payment so I can keep the exposure down to a respectable line that I'm comfortable with. Maybe you shorten terms to quicken payments and lessen exposure. Hey, normally we're a net 30, but we want to do this on a net 15 and be able to keep the cash coming through on a much more frequent basis. A bank letter of credit guaranteeing payment, right? If they are so strong and they do have a lot of credit with a bank or they have a lot of money and capital in a bank, is the bank willing to, guarantee that whatever they get for this job, that the bank will pay us even if they don't? Down payments to reduce the amount of credit risk needed. Hey, you want $1 million? Are you willing to put down, $500,000 ahead of time, so I don't have to, be all exposed all at once? Maybe they have, worked out something with the general contractor or the owner of the project to be able to pay a large chunk of money down to suppliers ahead of time, and maybe that reduces it. These are all questions to ask at the beginning, right? And none of these should be threatening to the customer. These are things that, if they're insulted that you would ask, well, then be ready to defend the answers as to why some of those things are being asked and, why you're uncomfortable with it. It's a business relationship, so you need to ask those questions early. And then the last one I always do, regardless of whether the credit is strong or not, and that's job sheets for notices, lien, and bond claims, right? Stipulate the jobs up front. If you're going to do a job for somebody, I want the job sheet. I want full disclosure. Who's the owner? Who's the general contractor? Is the job public or private? If it's public, I want to see the bond. I want to be able to get the bond information, right? All of that information is actually helpful for both you and the customer, because what if the customer doesn't get paid? And he's on the hook to pay you. But if you have the job sheets, then all of a sudden now you've built that layer of risk in there that you can go back to the general contractor, back to the owner, file lien on the project and get your customer paid for what you supplied. That strengthens that relationship, believe it or not. But you will have to explain that to your customer because lien and bonds and notices come with negative connotation. It likely means, oh, you're going to file a lien. No, it just means that play nice, or I will have the option to file my lien. But relay those to the customers at the beginning to help them understand that this is a business partnership. You're in this together, and you want them to succeed. If they succeed, you succeed. So helping them understand the layers that you're building into this and the reasons why are critical to that relationship management. Consult, discuss, and of course, document. Ultimately, it's about finding a way through this whole process, right? You got to try to make the deal happen and protect the company from the losses. You consult with the divisions, ask the customer, and be open to ideas. Finding a way through can be tough, but necessary. Most tough decisions lead to strong, lasting decisions if boundaries are set early. Should say long-lasting relationships, sorry, if boundaries are set early. And just like in a marriage or any other relationship or friendship or whatever, honesty, integrity matter. And so from your perspective, we're charged with talking about money, which is one of the top 5 most sensitive topics. But if we can speak about the money in a calm and understanding manner, answer the questions, be able to, work through things, and not just with the customer, but sometimes we have to have those conversations with our sales group. Come to the conversation with, well, here's some reasons we can't do it, but here's some things that we can do to kind of help offset some of that. You think they're willing to do this, right? Be able to have those open lines of communication to find a way through those tough, necessary conversations that are going to have to be had to grow a business. Maybe you're entering a brand new market and you don't know the customers in that market, but you've got to be able to grow the market share. And somehow credit has to find a way through the forest. When we talk about those big, tall trees that are in the middle of our way, finding a way around them to make sure that we can grow the business and be able to do it with as least amount of risk as possible. Talk internally with all the departments, share your concerns, right? Speak about the facts that you know that are a concern, that give you heartburn at night. Document those conversations, archive those agreements, and then follow up often with the customers. Some of the best relationships I've had and some of the best success stories are customers that left one big company because they wanted to start their own. They had no credit, but I knew they knew the industry. They just needed a little help. And with some stipulations and guidelines in the beginning, they grew to be a multi-million-dollar customer for us and some of our largest success stories, but it's because we gave them a chance. Hopefully we have some questions.
I have received some questions.
Good.
So first one we got is on the wet signatures. You said that you try to usually get wet instead of the digital. Mm-hmm. Have you had any of those hold up in court?
Wet signatures usually are better, obviously, but the digital signatures, I actually had one, and it was actually not, and it was not a credit application, but it did hold up. It was actually on a proof of delivery that, believe it or not, was during COVID, and we had an agreement from the customer that said, "Hey, we want a contactless environment," and you're hearing a lot of that, right? Because people didn't want to, have shared tablets or, pens or whatever because of COVID. So they instituted a contactless environment where there was email was suffice. And so we were able to provide that. But again, because we saved the contract amendment that said they were going to a contactless environment, that's how that stuck out. If you've got those and you're hearing a lot about that, please make sure to archive that agreement because it will, and it did hold up for us.
Thank you for that. Next question is, what are the risks of joint checks? You said talk to the GCs about working that out.
All right. So joint checks, they're better than not having, but they're kind of tough to coordinate. For example, if you have a general contractor that you set up a joint check agreement with, you're only as good as that general contractor is at managing that. I can't tell you how many times I've told the general contractor, "Hey, we haven't been paid." "Well, I just paid the customer last week." "Well, what about our check?" "Do we have a joint check agreement?" "Yes." "Oh, well, I already paid the customer." "Well, now you're going to have to go back and pay us, and it's difficult. What I will tell you is when you set up a joint check, we put the general contractor as our first contact for collections. When the invoices are due, we reach out to the general contractor. They become our customer in essence to make sure that we're getting paid timely. Hey, did they get the draw turned in, right? Did they get everything that you needed, the invoices? Did you get the proof of deliveries? Did you have everything that you need? When is your next check cut to them? Oh, I'm glad you called because I got a check come next Friday. We're getting ready. I forgot I had a joint check agreement with you guys. I'll get your check out to you. It becomes a lot more difficult line to manage because it's not just your normal collection call. You have to reach out to the general contractor, but there's a lot of loopholes. Anytime you add more, cooks to the kitchen, as I say, you're likely going to end up, well, I forgot, or hey, I took over this job because the previous PM left. You've got to be very careful with that. It can help. It's a tool, but it's something that's going to have to be managed. And
So something that I had to deal with, enjoyed to deal with way back into the day, was letters of credit. So what is a letter of credit?
the letter of credit, and actually, I haven't seen one of these in a long time, to be quite honest. But it usually means that a bank or some financial institution has guaranteed the customer for a specific dollar amount. I've seen them on projects. Hey, this project estimate was, $800,000, and we're supplying the construction loan. So, of that, your quote was included. So, we'll pay the balance is what's owed from a bank specific time. But it does give you a little bit layer of security, as we've talked about, to another pillar to go back and reach back to if the customer doesn't pay you. You extended credit to this customer based upon that bank's obligation or that financial company's obligation that said yes, they would stand in line, and if the customer didn't pay you, that they would. So your credit decision was based upon some information that you were able to receive.
So we have one question left. It's back from your slide where you talked about trade groups and peers. Okay. This is someone that's new to credit, so yay, we welcome them, but they want to know what trade groups are.
Okay. Well, you're actually on what I would consider to be one of our trade groups. It's kind of a community for us. But I would, follow Lori and on LinkedIn. These are valuable tools for education. In our industry, from the credit trade world, it's so much more about downloading knowledge and experience of things that we've went to. And I encourage any one of you. Here comes a gratuitous plug. If any one of you have some time and you can connect and find out when Thea Dudley is doing speaking, she has stories upon stories that are comical, that are full of value, learning tools. But they're experiences that all of us in the trade and in the credit world have gone through at numerous times, and passing along that information for what we've done wrong or what's happened to us in the past will only help to make your world that much easier to navigate through some of the mistakes that we've had to get through and learn from our experiences. So the NACM is a really, really good one. They're around the country, and they can be as specific as you want them to be. I've been part of an underground trade group. I've been part of a roofing trade group, a lumber trade group, right? Where you get a chance to talk about people, and likely they have some of the same customers that you're dealing with. But without having that information, you're likely going to open up a credit if there's nothing on the reports that you can find. So it's just a way for you to have connectivity with other markets or other competitors. In credit, I love our competitors because the credit competitors for them will help us navigate through. We in credit kind of have that badge of honor that we're loyal to credit. And our sales guys don't want us talking to our competitors because pricing and things like that, it makes so much sense. However, credit is likely going to be able to say, look, if you call this customer, talk to this person, right? This is the person to make the decisions. This is what I had to do to get paid. It's helping us navigate through some of those difficulties that we likely would take 6 or 7 or 9 months to figure out on our own, and sharing that information. It's kind of like a credit family, right? Where you try to make sure that you're connecting where you can with other people who've had some of the same struggles, likely with some of the same customers, and the same environments that you've had. There's a bunch of trade groups like this one out there that you can attend certain seminars, webinars, right? I know Lori's got some seminars around the country. And if you're in those markets or in those areas, you can attend some of those and have some great knowledge passed along to you. Credit Congress is another one that you can go to and be able to have great assets and resources and start to form some networks. But it's not just that big. You can do it as small as you want to. I've got 3 or 4 people that I've learned through the industry for years that I reach out to if I have a question about something that may be new or that I'm not familiar with. Perfect example is what we just covered, right? Letters of credit. If I got a letter of credit. I'm like, oh, okay, I remember this and I remember that, but this I'm not so sure. How about lien waivers, right? Everybody's seen lien waivers, and some of those language and lien waivers are, you know, unnecessary. But maybe it's something I'm familiar with. Maybe it's something that I'm not familiar with. Rather than reach out to a trade group, I may reach out to somebody I worked with, 5 or 10 years ago, and say, "Hey, do you remember seeing this, or how do you feel about that?" And I have a lot of people that do the same thing for me. So develop your own network of individuals, and call it whatever you want. But trade groups are vital. I think they really help answer a lot of questions that people have seen before. Lean upon that industry knowledge.
Toby, as always, I want to thank you for sharing your knowledge and experience. My name is Lori Drake. This is some contact information for you. Best place to find it is LinkedIn. Also follow handle.com. I put all the events, all the webinars, the seminars that are coming up. And if you want to share any advice or experience with people, please let me know that as well. So I really appreciate your time today.
You're too kind. Thank you very much. I wish everybody a happy new year. And
well, thank you again, everybody.
have a good day.
Thank you.
Bye, guys.